Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, everyone, welcome to 2024. I don't know about you, but I keep accidentally writing 2023 on everything still. So we're clearly in the start of a new year. But some exciting things that have been happening in the market this week. Everyone has been saying that the Bitcoin ETF is going to be approved sometime here in the next 7 days. Obviously, the market has been up and down a lot on that news. Yesterday, we were ripping a lot higher. Today, we are down on a very simple report from a company called Matrixport that stated that they didn't believe the ETF would be approved. It would actually be rejected this time around. And there's a lot of evidence, for both sides. So we're going to see, but all indications point to an approval sometime in the next week or so. So that's definitely one of the big exciting pieces of news that everyone's always talking about. But we're here to talk about other tokens, not specifically Bitcoin. So we will get started this week. First, talking about Orbit Chain. So Orbit Chain is a cross-chain communication and transactions project. They suffered an exploit this past Sunday that saw $81 million of TVL drained from their bridge. The hackers have been linked to the Lazarus Group, which is the same group from North Korea that has been responsible for very high-profile hacks in the past, such as the 2022 hack on Ronin that was almost, I think, $500 million, and several others. The idea, essentially, people believe that they are laundering money through to North Korea. The stolen funds have not yet been moved by the hacker. And since then, the Orbit team has started working with exchanges and law enforcement agencies to recover these assets. But as always, these are, difficult negotiations. May not see assets back unless exchanges are able to freeze them. But Orbit Chain's token, ORC, took a big hit. It's down 33% for the week. All right, next up, we're going to talk about Injective Protocol. So Injective is a layer 1 project. They basically agreed to change their tokenomics, or they had a governance proposal passed last week to change some of their tokenomics. So the project is based on the Cosmos SDK. So it's kind of part of the Cosmos ecosystem, but it operates as its own native layer 1 project. And it focuses on DeFi applications. They basically passed a vote to burn any ING tokens used to purchase their injective domain names, kind of similar to Ethereum's ENS project. The change basically is part of this whole INJ burn 2.0 rollout that they released in October. And this enables any DApp on Injective to contribute INJ fees collected to a weekly burn auction. So this is, basically INJ has like this deflationary mechanism as a result. DApps are able to contribute part of their fees towards that auction burn. And now we also have domain name purchases added to the mix. So just another way that this token project is becoming deflationary. Injective was a huge outperformer last year. If nobody noticed, they were quietly up over 2,700%, and they boast a market cap currently of $3.1 billion. Despite this, the protocol actually only has about $17 million in TVL. So reminder to always do your own research and look into some of the numbers behind some of these things. Despite the positive, news that came out yesterday, INJ is down about 12.9% for the week. All right, next up, we're going to talk about PancakeSwap. So decentralized exchange PancakeSwap voted to reduce their max supply on the token down from about 750 million tokens to 450 million. So the circulating supply of Cake is currently about 388 million tokens, indicating that they've got about 86% of the new supply has already been issued. These are a huge change. By the way, if anybody's followed PancakeSwap from the beginning, they're a DEX launched on Binance Smart Chain. I'll go into some numbers on their performance, but their initial token actually was an infinite supply that emitted constantly over forever. and there was no, no max supply amount. So this is a really sharp, change. Obviously, we just also talked about INJ's deflationary tokenomics. It seems that projects are moving more and more towards towards understanding that they can't have these crazy emission schedules and infinite supply amounts, and that lowering or burning their tokens is actually, a great way to, add some value around their project. So for context on PancakeSwap, they're currently the second largest DEX by volume overall, and they're the largest DEX on BNB chain. And they're trading about, and they traded about $110 billion worth of tokens in 2023. Despite this great news, PancakeSwap is down about 8.6% for the week. All right, last up, I'm going to talk about Radiant. So money market protocol Radiant Capital suffered an exploit yesterday for about $4.5 million. Yes, I know, another exploit. Radiant Capital, for those who are not familiar, is a multi-chain lend borrow project. And they actually ended up, they're a multi-chain lend borrow project. They're a fork of Aave. They're released on Arbitrum, Binance Smart Chain, and Ethereum mainnet. So while the project, basically what they did following this exploit is they paused their markets on Arbitrum in response to the exploit. Arbitrum makes up about over 50% of Radiant's 556 million in TVL. According to the team, none of the funds are at risk, but further details around the exploit have not been shared. According to a report from the audit firm PeckShield on Twitter, the exploit was related to the creation of a USDC market on Arbitrum, with the attack occurring within 6 seconds after the new market was deployed. Very interesting. Apparently, some folks on Twitter have said that this was something that has been managed on other projects like Aave, where they have some sort of a downtime between activating a new market. So people can't exploit stuff like this. So the Radiant token has managed to buck the news of the hack, though. It's up about 6.7% in the last 24 hours, and it's up 1.3% for the week in a market where everything has been down on the week, technically. But that's all I got for you guys this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.